Hey, good morning, everybody. Good morning, good morning, good morning. So, the Fed's got a problem, wherever it is, right over there. Fed's got a problem. Look at that interest rate drop like a rock right there. See that right there? We'll talk about it here in just a few minutes. So, first off, all trading involves a substantial risk of lost past performance, not necessarily indicative of future results. This presentation here, intended to be informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, hire and consult a financial advisor. I am cold. It's we had a hard freeze, I guess. 25 this morning. It was like 85 this weekend or some stupidness. So, a little cool. Got my jacket on. It's cool in my office. We didn't turn the heat on, so it's a little cool in here today, this morning. Anyway, morning, everybody. All right, let's see. I had something I wanted to show you. Running just a smidge behind here, so I want to pull this up and show it to you. Give me 1 second. Let me pull these up. I had something I wanted to show you. Continuation of what we were talking about, hyperinflation last night. Let's see if I can get this in the right order. There we go. And pull this over. All right, check this out. I just did some snippets, so I didn't have to try to do this Google search live. So, Camaro cost, 1969, before we had the last hyperinflation. Look at that, 3,600 bucks, right? Then on the back end of it, 10,099. So, rough numbers, 3.5 to 4 times more money. Then we look at today's price for that same Camaro. I mean, you can argue it's not the same, but it is the same. So, from 1990 to 2023, 1.6 times more, roughly, 1.5 times more. About 150% more money, right? So this is the hyperinflation, where we went from 3,600 bucks roughly to about 11,000 bucks. All right, so that's like 3.5 times, and that was from 1969 up through, so 21 years, and then from here to 2023, that's another 33 years. So if we see a hyperinflation, looking at a 3 to 4 times more money, so this thing becomes, somewhere in the neighborhood of $80,000 to $100,000 in the next 20 years. That would be a hyperinflation scenario. All right. So hopefully everybody understands what I meant by the hyperinflation. Looking at 3 to 4 times, your buying power reduces by 3 to 4x factor, and it could be as high as 10x factor. So this car right here could go move the comma over one and be 264,000. All right, that's what I'm talking about when I say hyperinflation. And we could see that, and I think that's the only real solution forward out of this whole mess. So, just wanted to illustrate that more in the price of something we can all kind of wrap our head around. All right, moving on here. So, S5FI, trying to get up out of here. We're seeing a little pullback in the futures here this morning. Little pullback, large pullback compared to, when markets are calm. So I'm looking for this thing to hold. I should pull up the Discord chart I just shared before I went live. Give me 1 second. Pop back over the other channel. Right here, open browser, pull that over, pull that window back over. So right here, this was the high yesterday before the Russian whatever news, Russian sinking our drone, whatever, of the Black Sea. And then we recovered sharply. It's kind of came up, and Then we have a 1, 2, 3, 4, 5 potential right down to the 786. That's the level I'm really looking to hold. That's 3867 on ES futures. If we get below 3860, right around this 1618 right here, it's actually 3856. We get below that level, then we're likely going to come retest this 3803 level down here. A 1272 extension of that whole move up off the low from a few days back, a few trading days back, that is. So that's what I'm looking for parameter wise. If we hold this area right here, that's actually a bullish pattern. We had kind of a messy, but a kind of 5 waves up into this high right here. That's a very clear 3 waves down with a 5 wave down on the C. We hold that right there. You know, this area right in here, it can rock it out. Now, a lot of people aren't expecting that at all. You know, oh my gosh, we're burning down the economy. So I just want to make sure that everybody is prepared for the possibility that this defies all logic of the market and we go blasting off higher. Now, what I kind of opened with was the fact that the market rate, DGS2, the 2-year Treasury constant maturity rate, is plummeting. All right, the target Fed rate that they are in their target rate is right up here in the orange box. We have that FOMC meeting next Wednesday, or Tuesday and Wednesday, and they'll announce the rate change, if any, on Wednesday. And right now, this 2-year Treasury rate is plummeting. If this continues to plummet, they will have no choice but to cut rates. All right, they chase these rates. This is a giant drop. Now, they may hold the rate steady. If they do, and this continues to plummet, I would not be surprised to see an emergency meeting and a rate cut. Now, the narrative hardly anybody's talking about is the fact that they may cut rates because of the systemic risk of banks continuing to blow up. All right? So just be prepared for this. This is the narrative that nobody's really talking about. Everybody's thinking, oh, they're still going to raise rates because they're still fighting inflation. I mean, inflation number came in at 6%, held steady year over year. Hot inflation, but there's systemic risk. And the interest rates play more tightly into the banks than they do into consumer lending. Consumer lending's on a long, slow kind of ebb and flow. But banks and the inner lending and all that stuff that they do with this right here, that can affect banks greatly. So, we have held in the past, it's dropped off and we've held constant until we get a bigger drop. So that's just something to keep in mind there. Watch out. We did get volatility over here and we held rates constant for a while until they got way out of hand and then they had to cut. I think either holding steady or cutting is the likely scenario. They may ease off a 1/4 point, but they may also just hold. I think hold is the most likely announcement, but if we got a surprise cut, it's going to be like fuel on the fire. The market's probably going to rip. Now, last time that happened, last time we got a surprise cut was back here in 2001. We were kind of floating along, and we got a surprise cut right in here that nobody was expecting. A surprise big cut. We were kind of floating along right here, and then we got a big cut right there in January in 1, and that led to a day where the market popped 20% for NASDAQ. So just something to keep in mind is that potential's out there. All right. And you can say it was a different environment back then, blah, blah, blah. Well, not really. The whole thing that 2000, 2008, and currently all have in common is that we printed godzillions of dollars of money and pumped it into the economy. And now we're having another bank crisis, another freak out. I don't know what they'll call it this time, but it'll have a name. This was the great financial crisis. This was kind of the dot-com bust, and it had other financial problems too. So, and this was something about rates. I don't know what they called this one. Anyway, all these freakouts lead to the same inevitable thing, and it's all exasperated by this. This current problem is exasperated by this long duration of zero interest rate policy. Almost 20 years we had from back here in '08 all the way over here to 2023. So there's a whole set of business people that have never done business on anything except in relative zero interest rate policy. And that's why I keep warning day after day after day about companies that are operating at losses. They've never operated in an environment where money was expensive to borrow. So let's actually talk about what's moving today. So, all right. Like I said, ES kind of gave you the parameters there. NQ, right back down, holding that area. It has not returned back to the orange at all. It's actually holding up much better than the S&P is as far as the percent retrace. We're holding right above the 50 right there. And this thing can bounce and go. Tech is still being strong. Russell, deep retrace, almost back to the bottom. This has a IWM has a 5.5 point gap down from the close yesterday. If the market starts rallying at all, that's a huge opportunity to trade that gap close right there on Russell. DXY getting a little bit of reprieve this morning, a little bit of rally. Look at the levels here. So we bounced right off of that, right back up to the roadmap line. If it finds resistance here, the next move is probably down. Now, if it breaks back above this high, right up here, it's going up. But if it finds resistance here, breaks back below this level, it's going down to the 90s. Another one that was moving, look at oil go. I was saying 2 to 3 days last night during the 30 Minutes of Awesome. If you missed that live stream, go check it out on my history. 2 to 3 days, we're probably going to get down to this target area. Now, this was a watermelon seed squeeze. That's what I call that pattern, where we just kind of squeeze it in. You don't know which way it's going to go. It's like if you've ever eaten a watermelon seed, squeezed it between your fingers, it pops. You don't really know which way it's going to pop. Incredibly hard to target those watermelon seed squeeze. So this one breaking to the downside instead of the upside. It looks like it's going to get right down in this target area. Now, I'm cautious. We want to wait for it to hold this area. It can certainly extend lower. I have a bigger pattern for it to drop on down to this 50 level on a bigger chart, on a 3-day chart. It can drop right down here, and it looks like a beautiful wave 4 off of the negative low it made back in 2020. So this thing would be a very nice retrace, a very nice place to hold, and that would set us up for wave 5 that goes incredibly high, like 200. So a move from 50 to 200 on oil. If we play something like UCO, that can be an incredible move, but we got to wait for this to finish setting up. All right, so I got my eyes on that one. I'll keep you updated. Stuff moving. FAZ, look, making a new high this morning in the pre-market. So the crisis is not over yet. It's not an all clear yet. FAZ or FAS, FAZ is the bearish one. FAS is the bullish one, and it's making a lower low today. Not quite down to the lows we saw back here in October. So that one's got a little more juice left in it. Bitcoin got a little retrace into the close yesterday, but starting to ramp up again today, back above 25. I'd really like to see this one get up into maybe 27 today if it's going to be strong. So I got my eye on that one. Ethereum, stalled out a little bit as Bitcoin did, and not quite as green and bullish. But now, one of the things that I typically see when Bitcoin and Ethereum both get 3 green days in a row, which they have, they typically go on about a 2-week run higher. This is one of those weird little things in the market. When Bitcoin and Ethereum together, and it doesn't happen a lot, when they together get 3 green days in a row, they will typically go on about a 2-week run higher. Now, it's not like an epic run higher. It'll be a move higher. So keep your eyes on those. If you're into the crypto stuff, that's an opportunity out there. All right. KRE looking like it's going to push lower. That's the regional banks. They're getting liquidated. The lines for the too big to fail banks are incredible. But you know what? Too big to fail banks can still fail again, even if the government bails them out. So just be careful if you're going to trade the bank stuff. This stuff can all go lower. And remember, when Lehman Brothers blew up, Bank of America was at like $20-something, $26 roughly. And they didn't really bottom until they were like $2. So this stuff can continue. We can continue to see liquidation in the regional banks and in the big banks even. So here's another bullish bank going down. That one doesn't have far to go to get to zero. CMA, I believe that's a bank. Yeah, major bank. Looks like it's finding some weakness today. Zion, another major bank, finding a little bit of weakness down. I mean, popped yesterday and right back down. So lots of weakness still in CoinHill. I'm not sure why this one stayed on the list here. That's not really moving. Let's see, BNKU. Looks like that one's going to push lower. That's a leveraged 3x leveraged bank. You know, all these pushing lower. So lots of banking kind of short potential here. SRTY. There's that ultra short Russell. Potential for that one to break out and run. Cautious though. All right. Russell is in a point where it can reverse. So I would use caution. This is not above this prior high over here. Even though these this one is a leveraged ETF, so be careful on that. The leverage stuff doesn't always play my patterns exactly right. The leverage skews these a little bit. So if we're going to see Russell breaking down, this one will run. If Russell starts to find any kind of rally, this one's going to plummet. So that's kind of the primer there. VXX showing a little pop, but not getting above what it was. I am in a SVXY long for VIX to kind of return to calm out to June. I'm all the way out here with my return to calm play. Kind of expecting it to, you know, find its way back up here out to June. All right. UVXY or UVIX, excuse me, that's a 2x long VIX. Getting a nice little pop today, but already showing a little red, so this one can drop more. Be careful on these. All right, this one was showing a little bit of pop, but it's stuck on the roadmap line. That's a bearish pattern. So this is a zero coupon treasury index exchange traded fund. I'm not even gonna guess what the crap that is without going to look it up. Some kind of treasury index and get a pop, but probably gonna show some weakness. SMAR, smart sheet, bouncing off the roadmap line, getting a little strength. This one, if I we pull these over to the current swing high and low, got resistance right here at 44. We can get above that high right here. These guys right here, we start breaking above that. SMAR can get a run up to this 51 area, right there, 51.50. Possibly even 55. You can see last time it bounced, nice big run, bounce it again. Can we get a nice big run? Above these highs is where we start confirming that move. All right, TZA showing up. Wow, look at that. 3x bears. Nice move. Not breaking out higher yet. And then we have resistance on these prior highs over here. Excuse me, monster get me a little bit. All right, talking back to me. All right, so a breakout above 38 could see a run higher on the bears for the leverage stuff. Just be careful there. Like I said, we can turn on a dime in the market, and it's not going to make any sense to anybody. TLT, I am in a long on this one, looking for this pop up in this area. It's been a big mover relatively compared to, it doesn't typically move a lot of, it doesn't make a big bunch of big moves. So this gap up and this continuation up and then retracing yesterday and then popping back up today. I'm kind of expecting this move up to the 115 area. That's what I'm really expecting. And there's the roadmap line right there. We're just kind of stuck on it. If we get above it, especially, I mean, we found resistance at these prior highs. Look, I mean, this is right, coming right across, right? Resistance, resistance, resistance. We break above that resistance, get up to 109.50 or so. Probably going to get to that 115 to 120 area on TLT. And then GLD breaking above the resistance at 178. This is one I put out on email. I talked about last night. I've talked about it over and over. See, the aggressive entry was down here around 171.75, and I put it out a couple weeks ago on the email newsletter. I've talked about it a couple times. Talked about it in Discord. We're above the resistance. Don't want to see it fail back into this resistance at this point. We want to see it get continuation. That 185 or 190 are the upside targets. You know, that's like the super stretch goal up there. And this thing could possibly keep running on out to 200 if this whole situation just keeps unfolding. So, all right. That's kind of what's moving so far today. Market's open. We'll see where we get to. I'm highly cautious today. That's how I would sum up everything. Looking for support to hold as we identified it at the kind of in the opening there. Looking for this thing to hold. If we can get a rally going at all, it sets us up, but I'm very cautious that we see a breakdown. All right. Very cautious. Any questions before I wrap this up? The one thing we need to talk about was the winners from last night's banking crisis meeting. So let me pop back over and grab the lists. Oh, the PPI. Yeah. Thanks for reminding me. I didn't even mention PPI because everything else going on right here. Need to reload and pull the numbers. A PPI coming in weak all across the board. That's actually bullish for the market. Like producer prices coming down suggests that, say, 3 months, 4 months from now, these prices will start being reflected in consumer prices. It's kind of the way it works. It takes it's like a lag, or it's a leading indicator that retail prices will start to show up as softer. So we see the Empire State Manufacturing Index. You know, that's the thing about higher prices. It quashes, smashes demand. So you start seeing the manufacturing pullback, and then you see producer prices start relaxing as demand relaxes, and then several months later, those prices show up in the actual market for CPI, the consumer prices. So this is kind of a interesting way to look at it. Most people don't look at it that way. I'm just telling you how economics work. All right. And then retail sales month over month pulling back 0.4. Everybody thinks that's weakness, but really it's just a side effect of higher prices and everybody freaking out about banks and stuff. So, all right. There you go. All right. Back to winners from last night. Let's see if I can pull this up. Get my Discord off the bottom. All right. So the winners, I will email you later on. We have Susan F. We have Randy R. Arturo R. Mary H. Will W. Jerry B. And Patricia W. So those are my winners. I will be emailing you about your Zoom session, giving you an opportunity to come meet with me in a small group where you get to talk to me with your mic and everything. Turn your camera on if you want to. It won't be a requirement, but it'll be a back and forth. All right. So that was the prize for coming to the thing last night, the giveaway. Those are the winners: Susan F., Randy R., Arturo R., Mary H., Will W., Jerry B., and Patricia W. If you're in Discord, I'll let you know too. So, all right. That's my winners. Thanks for playing, everybody. Come back and see me tomorrow for another Morning Monster. 9:15. We'll go through it again. We get the FOMC coming up next week. Tomorrow, we've got unemployment, Philly Fed, building permits, housing starts, import prices. More data tomorrow, but it's not really, it's not a big day of red stuff like it was today. Potential market movers. So there we go. All right. Stay safe out there. The account you save may be your own, and we'll continue the conversation into Discord as usual. All right. Keep up with me. And if you want to come join us, links in the description. You can do that. Make sure you're subscribed and hit the alerts so you know when I go live tomorrow morning. Thanks for coming, everybody. That's Morning Monster. Bye.